So you heard it here first, folks. Fed President Goolsbee is optimistic that 2025 will produce the soft landing. Again, if you remember past conversations, it is often cited that we had a soft landing, I believe, in the early 90s. This may go down as the second time. Again, today we're going to talk about Fed President William Goolsbee Barkin. We'll talk about Fed Beige Book. We'll talk about inflation and what might be lurking below the surface. We'll hit some earnings, and we will talk Vegas. So let's go right into it. What are Fed presidents saying? Now, remember, we are at that time in the economic cycle, the Fed cycle, where we are going to find out who is a bear or who is a hawk and who is a dove. We are trying to figure out, who is going to cut, who is ready to stand pat, and who might be brave enough to start talking about a rate increase. So we'll go through Goolsbee first because he had the most interesting quote, kind of almost declaring victory that 2025 will be a soft landing. What else did he have to say? He said he's pretty confident that we will get inflation to 2%. All right. Notice he didn't put a time frame on that, but, whatever. There is an uptick in business confidence and certainty since the election. One of the things that I'm very proud of is we called that very early on this channel. We called it probably mid-November. We were hearing from agents, mortgage brokers, and a lot of companies, at least in my circle, that threw away their 2025 plans and redid them. So if you're watching this channel, you knew this months before the Fed, or at least Goolsbee. The job market is not a source of inflation. Again, something we were very concerned about 24 months ago was a wage inflation spiral. Again, according to Goolsbee, not coming. And then finally, the neutral rate is lower than we are now. So again, Goolsbee clearly with that last statement says he is ready to cut, as we go forward. So he put him down as a dove, and he certainly thinks more cuts are coming. What about Fed President Williams? Demand for housing is very strong. Not sure I would say very, but all right. Economy has returned to balance. Okay. Expects growth to come in at 2% for 2025. Again, 2% would be a pretty significant downshift. I mean, again, it may not sound like a lot, but when you're talking about the U.S. economy going from, let's call it 3 to 2%, that is certainly a bigger downshift than Fed President Williams is making it sound like. Number 4, he's not surprised bond yields rose. Oh, really? Really? You've cut 100 basis points and bond yields go up, long dated bonds go up 100 basis points, and you're not surprised? I think I'm going to call a little white lie there, but hey, you never know. And then finally, some disinflation is coming from outside the U.S. Folks, I think it is very clear that China will be exporting deflation. They are in a world of hurt. Their economy is in trouble. It will be in trouble for years to come. They made some horrible real estate bets that will take decades to unravel. Let's go through the third and final one that I captured some notes on. Fed President Barkin has not seen anything in the long-term rates that should influence Fed decision. Basically, he's saying, so what if mortgage rates go up? He ain't concerned. The latest CPI reading, again, came out yesterday, suggests that inflation is still declining. More on that in a minute because I have looked under the covers and I might just call BS on that statement, but hey, he said it, I reported it. Job market is stabilized. Okay. And then he's not concerned about the U.S. economy overheating. So I think Goolsbee is clearly a dove. Williams is a little bit harder read. I might throw him down as a slight hawk as of this morning. And then Barkin, I'll throw him right in the middle. I don't think he's really declared anything. So now let's talk about inflation below the surface because I don't think people realize this. Again, I thought yesterday's reaction in the market was interesting. Again, I have a hard time believing that the significant drop in rates yesterday was because core CPI came in slightly better. So here's some data I captured below the surface. I don't know anybody else reporting this. Here we go. Core services CPI. Again, services is what, 70, 80% of our economy, right? We don't make almost anything. So let's call it 65%. So it's a big deal. Core services CPI, 3-month annualized, is 3.2%. 6-month annualized is 4%. Neither of those numbers are 2%. 3-month CPI, again, all of it is at 3.9. Again, annualized numbers. If you simply annualize last month's 0.39, you actually get a 4.8% CPI reading. Core CPI, the reason the market took off, the reason bond yields collapsed, has spent 7 months between 3.1 and 3.3. And then the final one, which we talked a little bit about yesterday, but I'm going to hit it again. The 3-month headline, the headline CPI, the one that was reported at 2.9, is accelerating for 3 months. Folks, that should be a bad thing. 2.5 to 2.6 to 2.7 to 2.9. I'm not sure why it is seen as a good thing. So that's kind of data below the data. It'll be interesting to see where we go from here. Again, it is going to be a very interesting 6 months in 2025. So that will be interesting. Fed Beige Book. Again, the Fed Beige Book, if you don't know what that is, that's basically a summary of what is going on in all Fed districts, all 18 districts. Here are some takeaways from the Fed Beige Book. Prices increased modestly. Wage growth picked up. Inflation. Employment picked up on balance. Hiring more. Net positive. Economic activity increased slightly. Good thing. And then finally, contacts, right, the people they spoke with, are optimistic about 2025. Again, folks, we called a vibe shift right after the election. It is now showing up in economic reports. Jolt's report was a great example of it last week. I don't know if I don't normally talk about it, but the Philly Fed manufacturing data, frankly, this data, this is such an outlier. We're talking like 17 standard deviations away, like crazy 0.0 something. So here it is. Philly Fed manufacturing data is the best in the last 3.5 years. Last month, for context, it was negative 16.4. It was estimated to come in at negative 5. So better, but still negative, still contracting. Somebody's going to have to do a recount on this number because this number is stupid. It came in at 44.3. The best or highest reading since November of 2021. Crazy. We did get retail sales this morning. They're kind of a ho-hum. Again, they were slight misses. Again, headline number for retail sales last month was 0.7, expected 0.6, came in at 0.4. So still growing, not quite as expected. Core, kind of think ex autos, last month was 0.2, expected 0.5. It too also came in at 0.4. Weekly jobless claims, we talk about them every Thursday, every Thursday. Last month was 201, or last week, 201. Expected 210, so slightly worse. Actually went up to 217. So again, not a problem. Still below that, psychological, we've been between 240 and 200 for seemingly a year. So nothing to get concerned about, but we're always looking for the start of the trend. So next week's number will be important. That said, continuing claims, the one that we have been talking about is the one that's really important because I think the tenure or length, the duration on unemployment is going to be the story of 2025. Even if the unemployment rate stays, below 4.5. I think duration is going to be a problem. Good news this week. It was 1.87 million folks. Now it is 1.86. So down 100,000, which is obviously a great thing, and kind of goes back to, the Fed Beige Book, right? Hiring was up. So again, 100,000 people came off long duration jobless claims. In fairness, there is another story that it could be they could have rolled off unemployment, but let's hope that that's not true. Let's talk about our Vegas event, folks. I don't know if you realize this, but we are 30 days away, 30 days away from our Vegas celebration. Tickets are selling fast. Please go get them because they're almost gone. We have 53 tickets left. Only 5 VIPs will probably be gone in the next day or so. That means there's only 48 general admission. Please get your tickets. Get yourself there. Buy your tickets. Get your hotel. You're not going to want to miss it. It is an ORAT celebration. We do have 17 people joined up for the virtual because I know some people can't for travel or scheduling. As always, I will exceed your expectations. Both people in person and virtual will get the replay as soon as it is available, likely 2 to 3 weeks after. So if you miss a session or you're out that weekend, but you want to get the virtual session, you can. I will have it recorded and get to you. I do want to congratulate people for joining school. It is the best place to be if you're interested in real estate investing. 360 some people going the same direction. Want to congratulate Heath and James for joining. Folks, 67 cents a day to get around 350 people going the same direction, thousands of dollars in free education, 6 different accountability groups. I'm not sure what you're doing. If you have any interest in starting, any interest in growing, any interest in just getting through the first 5 years sucking, it is the spot to be. Let's talk about some earnings. Yesterday, 6 for 6, right? Bank 6 for 6 beat on earnings, 5 out of 6 beat on revenue, Wells Fargo being the one that missed. Morgan Stanley beat top line, beat bottom line on strong equities and fixed income. Bank of America beat top line, beat bottom line on strong investment banking and interest income. We did have an accountability that kicked off yesterday. Shout out Frank. Again, folks, we will talk about anything that you want to in these groups. Yesterday, they talked about masonry advancements. I'm not even sure what that is, but hey, good for you. Deep dive on flooring, pricing, installation, things of that thickness. And then aspirations for the ORAT event. Folks, get yourself to the event, get in school, get around other people that are doing what you want to do. Is that's a hack of life. That is a hack that I did not understand for the first 5 years. I did everything in my own little bubble. If I would have got around other people like Jason Pritchard and Adrian and Ty and just all the excellent people that are on this channel, I would own twice as much. I would have probably retired 5 years earlier. But because I was so both arrogant and uneducated, I just didn't know. I didn't know anybody that did real estate. I think a lot of people struggle with that. Join school. 67 cents a day. If it doesn't work out, stop. It's not a year-long commitment. It's a month-to-month. So there you go. One more thing about inflation. I dug a little deeper. It's like, where is inflation? I don't know if you saw this. Eggs up 36%. Wow. Juice, 12%. Pet services, 11%. And as a happy dog owner, happy and sunny, yeah, you're expensive. Airfare, up almost 8%, 7.9%. Food at home, up 1.8%, while food away doubled that at 3.6%. Utilities, up 4.9%. Freaking car insurance, 11.3%. It's wild. My dream car, which thankfully I've had for, how long have I had this car? Man, I think I've had this car 8 years. Still love it every day. Get your dream car. I hope you all get your dream car someday. I still smile every time I see my dream car. That my insurance on it, it's 8 years old. It's got 103,000 miles on it, and I drive it every day. It's my dream car. Did I tell you that? It's my dream car. In case you don't know what it is, it's an SL550 two-door hardtop convertible V8 V8 turbo, two-seater, pearl white, beautiful. Love that car. Love that car. But the reason where I got sidetracked is my insurance today is about as much as it was 3 years ago. It's crazy to think about. And then finally, if you smoke cigarettes, which quit if you can, inflation was 7.8%. I guess the last thing to talk about, just because I wrote it down, have you ever heard of the Hindenberg Research organization? They have put out reports on some of the biggest frauds in the industry. They haven't always been right. They're definitely a short seller research group. They have uncovered some spectacular frauds. They've also missed a couple of times. But it looks like their founder, Nate Anderson, is shutting down the shop. He's done doing that work. So, folks, at the end of the day, I hope you have an amazing day. Like, subscribe, comment. If you're still watching this video, do me a favor, hit that subscribe button. I would greatly appreciate it. Please, if you have any interest in real estate, I mean, honestly, if I had a call like, hey, Michael, do I need to go to the event in Vegas or should I join school? I would join school. First off, it's a hell of a lot cheaper, right? Coming to Vegas, right? The tickets are what the tickets are, but you're going to have to get a flight, hotel. It's going to be thousands of dollars. It's not lost on me. A lot of people can't afford that. So what I would tell someone to do is spend $20 a month on school and buy the virtual ticket for $99. For $120, you're going to get introduced to the goodness of the ORAT community. And then, hey, come next year. But yeah, school is what I hope to be known for in a year or so, because I think it is going to be the place that real estate investors want to go. Right now, I'm probably best known for my best-selling book, One Rental at a Time, or perhaps this amazing YouTube channel that has almost 67,000 subs, but more importantly, 15,000 videos. Can you believe it, folks? 15,000 videos. I still think it's wild when I say that. Anyways, I'm just rambling. I want you to have an amazing day. I want you to make some memories. I want you to smile. Just have a great day. Later.